Good morning, everybody. Jack Gleason with StartupTrading.com. It is the 30th of January. We got one more trading day of the month, and we're gonna finalize the first month of the year. But title of the video is "Can we complete larger targets before earnings?" So I want to kind of talk about what those larger targets are, and go from there. So initially, guys, coming out of Monday, we had this traditional just in the NASDAQ, and that traditional completed into the close on Tuesday. And what we ended up running down into after getting that completion was that next measured move on the back of earnings, or not on earnings, on the back of FOMC, which was between FOMC and uh, FOMC and the earnings yesterday. Holy crap! I didn't trade any of it, but we were just zipping back and forth. Um, and then this was a very solid support line. And then in the overnight session, we've rallied all the way up to the top of the range. One of the things I'm going to want to watch here is for a break above and continuation to hold above the 78% of the range, which we have right now. That's 21,626. So I just want to keep that. I'm going to draw it as a dash purple line, that area. Oops, of course we're gonna connect there. And just to keep in mind that that's really, when we break above the prior day's high, I want to see us continue to hold when we open. So that'll be something I'm looking for. If not, in a bearish case scenario, overnight, now you can see the wicks into this 50 that I just mentioned drop multiple times here, but I'm actually going to draw this morning from where the 50 would have been to the overnight high. That's going to give us a 21,558. I would not take any shorts below that whatsoever. In the morning session, we have what was it? Meta yesterday, Tesla, Microsoft, and it's going to be interesting to see what happens here off the open. But we definitely have enough of news events that have happened, and our upside targets from these two draws, and this is the higher time frame one that I'd like to see hit before Apple. And if we hit it before Apple, I think it's going to definitely be a potential reversal zone, but that's going to be that 21,837. Now that would be a much higher time frame target here than this one, even though it's actually not that big of a difference. But this 21,789 is going to be the halfway back from where the 50 bid was yesterday to high. And then I just want to look at the action. Yesterday we had extensions that we were looking for at 80. There was a couple different levels. We didn't hold any of the higher time frame levels, but we had a halfway back short for the day in the middle of lunch. This was probably the best trade. And then this was just support, rip, support, rip, support one more time, and then rip. And then once the overnight session actually got really technical, you had the low from 405 to that earnings high, catch a bid, and then we retested it here in the overnight session and completed. One of the things you can look for, and as aggressive, if we rip straight off the open, this next traditional is going to be a potential setup. So we're technically opening on that target, right? We're opening, if I just draw this draw, and actually if I draw it the same way I'm drawing the other draw, which is drawing from the 50 to high, there we go. The 50 to high, you can see we trade that. We're opening at its profit target. What I really want to see for bulls is us to not drop back below that 50%, which is roughly the morning overnight low, this level. So my bias is bullish. My targets are as given above us, with the largest one being 21,840 area, and then the other one being like 21,000, I think 789 I said. So we'll see if we can hold those and run to targets. And then moving on to the S&P 500, a little bit different of a setup. I'm going to get rid of the extended session here, but we had that morning low of Monday too high, trade our 50% retracement at 60.51s, and multiple tests here once again. That upside target is a 61.31, and I'd love to see that. That's going to be filling our gap from Friday, if we can get there. I'd love to see that happen. But as we go into the day here, you can see these wicks get below this 60.51. Use 60.51 as your anchor to high. We should stay above that as we get into the day here. We should stay above that 60.51 to whatever the high is. So I'm going to turn back on the extended session, and we'll say, like, you can even see in the overnight session, if you draw from where the actual low is, the high, that setup doesn't trade. But what if you draw from 60.51? It trades, right? That's just, it's something on these bigger levels when you wick out, especially in these high volatility times. The draw is not from the low. It's from where the computers had their bid, okay? Because these are just algos, right? These are just algos bidding this, and those algos, what they see, they place their bid here. We dip lower, it pushes through. We break above the shorts, and those same algos go, oh, look, guys, we were right. Let's buy it again at the next pullback. And they come back in right now at 60.76. That upside target is going to be a 61.13 here. 61.13, and the negative 61 be 61.32. So anything above, we'll see. Maybe it's just a rip roaring rally, but anything that's going to be my premium zone. Would not look for any longs above 61.30 whatsoever. But even we'll see if there's a reaction off of 61.13. That takes us back to roughly yesterday's overnight highs. But if we can push through that, which I don't know. I don't think it's going to happen immediately off the open. It might take all day. But as we get later in the day, Apple earnings is going to be the next driver of this index. And let's keep in mind, once these earnings are up, guys, we stuck a beautiful halfway back long in the ES on Monday, okay? And that upside target is 62.45, and everything so far tells us we're going there. We had halfway backs on Monday. We completed on Tuesday. We had another halfway back here on Wednesday. We'll see if we complete on Thursday. And that once again, that leads us up to a 61.31. So that's what I got for the indexes. I'm just going to quickly peek at oil and gold. Oh man, gold's just been ripping here. Don't really have a setup for it right now, but I will keep an eye on gold's. I mean, you can take a look at it, but Mondays there was a halfway back, and there's just been ripping ever since. And oil's on a daily halfway back long, but it has not broken short trend. But I'll leave those out of my anticipated markets that I'm going to trade here today, and just once again focus on these indexes with a bullish bias. So I'll share these levels with you guys in the room. Jump on the squad.